Good morning. Welcome to the May 19th edition of the E3 Weekly Market Report. I'm Pat McClatchy, looking at the exports that have just now scrolled across the screen. We'll start with cotton. Cotton number was a good one at 189,400 running bales. That's up 83% from the previous week and up noticeably from the prior 4-week average. Vietnam took 58,700 running bales. Turkey took 33,000 running bales. China took 28,900 running bales. And we have good numbers across the board from other countries. This is, I think, a surprise for the market. At the time this number came out, cotton was down 18. Right now, cotton is up 3 in July. December was down 17. Right now, December's down 3. So we have bounced some on that news. Looking at next at soybeans, a number of 556,400 metric tons, and that number is up noticeably from the previous week and 34% over the 4-week average. Unknown destinations were number one here, taking 334,900 metric tons. Indonesia took 41,900 metric tons. Japan, I skipped, took 51,000 metric tons. Soybeans, just before the report, were down 8.5 in July, and right now they're down 7.25. November soybeans were down 8. Right now, November soybeans are down 8.5. Looking at next at corn, good number here, 1,473,100 metric tons, up 33% from the previous week and 13% over the 4-week average. Japan took 572,600 metric tons. Saudi Arabia took 265,000 metric tons. Mexico took 136,100 metric tons. Corn, July corn was down 4.5 just before the report. Right now it's still down 4.5. December corn was down 5. Right now December corn is down 4.5. Switching here now to the wheat number. Net sales of 175,200 metric tons. That's the marketing. That's down 41% from the previous week and down 37% from the 4-week average. China took 88,300 metric tons. Japan took 34,400 metric tons. Brazil took 28,500 metric tons. The wheat market was down 8 just before the report, and right now the wheat market is down 7.75. No real change. As I glance over, I see now soybeans are down 10. We're just making a new low there. We did get a positive reaction, a little bit of a positive reaction, but now we're starting to come under pressure again. I see that right now the cotton market is down 12 to 13. So it got a bounce, but now it seems to be coming under pressure. I think the overriding news in these markets, and the reason everything overnight was down, was yesterday afternoon the Fed released their FOMC minutes. And in that, it surprised people. It seemed to indicate that they were hoping and planning to raise rates in June. That was a surprise. I think also, the caveat was that they want the economy to continue to move along the path and not show economic releases here over the next month in front of us that would indicate a slowdown. I think most odds makers are placing the best odd that they'll raise rates in July. But the market has had to react to it. Stock market's down, precious metals down, crude oil down, all agricultural markets were down going into this export figure. So I think that's probably the dominant factor here. Also, the dollar is up. So it could be that the exports and the reaction to the exports will be somewhat muted. We've got beans down 12 now, so that's continuing to weaken. Okay, well, let's take a look at some of the recent news. Crop progress came out Monday. I'll just quickly say there was not anything that stood out as unusual or late as far as planting goes. Cotton was 40% planted in the U.S. The average for the 5-year average is 39%, so we're on target. Texas was 30% planted, and the average in Texas, 5-year average, is 30%, so we're on target. Beans were 36% planted, The average for soybeans is 32%. Corn was 75% planted versus 70% average, and corn was 43% emerged versus an average of 34%. So corn actually, even though all the talk about wet weather in the Midwest being a negative, it seems to be, as far as planting goes and emergence go, to be very normal, even a little ahead of schedule. Spring wheat, 89% planted versus an average of 64% normally, and emerged in spring wheat, 60% emerged versus 36%. So that's on target. A little bit of a commentary here about the markets. We're at that time of the year when we typically are in spring, when we're focusing on weather and crop conditions, and typically in agricultural markets, this is the time of the year when the market firms up and oftentimes makes its high. Anytime from the spring to early summer is the tendency seasonally through history to do that. Doesn't mean that that will happen this year, but it certainly could, and it's set up to do that at these high levels that we've reached. I mentioned the Federal Reserve minutes and how that was taken in a negative way for all commodities. It's important to keep an eye on economic news. We do it every day, and we do our morning report. The first thing we look at is Asia to see what those markets have done, to see what the news is. Then we look across into Europe to see if anything has happened there and what those markets are like. And then we look at the early morning markets in the U.S. and commodity markets overnight. It's not just about weather anymore. It's not just about supply and demand anymore. It's about what's going on around the world. It affects commodities. If you're a cotton farmer, you grow soybeans, corn, or wheat, you need to stay in touch with economic news around the world, and that's what we try to provide people here. So where do we go from here? Let's just take a look at it commodity by commodity. Cotton, old crop prices right now are at $61.96. Most analysts are talking about maybe at the market finding resistance between 63 and 64 in old crop, and new crop resistance in the area of 62 to 63. As far as how low we could go, there's talk old crop could see the 58 to 59 level, and the new crop could see the 57 to 58 level. Looking at soybeans, old crop right now is trading at 1064. There's a feeling that the range for old crop soybeans could be as low as $10 and as high as $11. In new crop, the range seems to be 1080 to the downside. To the upside, 1080 to the upside, and 980 to the downside. That $1 range could be very well where we stay confined, and we're on the higher end of it right now. Corn, old crop, right now is trading at 393.5, down 6. Resistance is up at $4 for old crop corn, and new crop is up toward 410. The downside possibly in corn, 360 to the downside in old crop, 370 to the downside in new crop. Wheat, we're just looking at July wheat. July wheat right now is trading down 9 1/4 at 470 3/4. Possible resistance up toward 485, and this market could break down to 450. There's a strong tendency in wheat from mid-May to June, in the mid-June, of a downward trending market. So that very well could be that market's in trouble and could continue to work lower. Any farmer should take advantage of high prices in the spring to be looking to book some of their crop, whether it's in the cash forward market, what they're comfortable they can produce, or hedging on the board with options or futures, whatever they're comfortable with. So that's really it for today. One last look. Cotton down 13, soybeans down 11.5, corn down 5 3/4, wheat down 9 1/4. I see the dollar just made a new high, so that market's moving up. Crude oil down $1.21, metals down quite a bit, silver down 70 cents, gold down 27 cents, and the stock market continues to soften. That's it. Have a good day. Thanks for joining us for the E3 Weekly Market Report.